Welcome back to Debits and Credits with Haas and Dawe with another episode in our podcast family. Today we're going to talk about lease accounting, the accounting for office leases and equipment leases and car leases and leases of any type that are now part of our accounting world in the forefront. This started with forever and ever and ever ago. There were standards we have to follow on how we deal with leases, and whether it be an operating lease of a business that has its office space, or what they call a capital lease, where you are buying a piece of equipment or you're buying a car, and at the end of the lease, it actually became yours to own. And then there was always type of disclosures with regards to the financial statements of this activity. But back in 2014, the Financial Accounting Standards Board, with the acronym of FASB, created a new standard where the leases, these office leases, not only were they going to be disclosed, but they now were going to be part of the financial statements of companies who were following what we call generally accepted accounting principles, another acronym known as GAAP. And so what it came about originally was that there was pressure from the international world, from outside of the United States, from Europe and from Asia, where the accounting standards had been different dealing with leases. Leases had always been on the balance sheet, and so it was showing as a liability that someone owed money on a lease. But in the United States, with the United States GAAP, it was only a disclosure, and so they wanted convergence. And so FASB, the Financial Accounting Standards Board, and that's the body that promulgates, that puts out all of our accounting standards for accounting in the United States, said we're going to look at converging. We're going to look at coming up with a standard that will be close to what the international people have, and that's where the process started in 2014. Now it's a difficult change because it was going to put such a different look on the financial reporting of companies, in that this standard was going to make companies show on their financial statements a liability for leases, office leases, automobile leases, equipment leases, leases of any type. Now, if you're talking about like an office lease, that's an expensive item. Whether it's $1,000 a month or $5,000 a month, when you talk about 12 months of lease payments qualifying as a current liability, that was going to put a big damper on somebody's balance sheet. And when you look at the financial statement, let me back up a second. You look at the financial statements themselves, you've got a balance sheet. And the top half of the balance sheet are the assets. And they can be current assets, they can be long-term assets. And a current asset is something that's realizable or is usable within the next 12 months. Cash in bank is a common one. Or there could be a loan that has less than a year to go on it. It's just something like that, where there was going to be, the company was going to realize the benefit of that asset within 12 months. That's a current asset. The bottom half of the balance sheet is known as liabilities and equity, liabilities and capital. And then the liabilities also are broken down into current and non-current, meaning a current liability is anything that's due within the next 12 months from the date of the balance sheet. So let's say it was a December 31 balance sheet. It's the amount of liabilities, whether it be accounts payable, which are the regular bills, whether it could be any type of accrued expense for bonuses that were going to be paid, whether it's going to be that some other liabilities for some loans, for like with an SBA loan or a car loan, that the portion that was due within the next 12 months would go into current liabilities. Anything due after 12 months would go in a section called non-current liabilities. Well, with office leases and with equipment leases and car leases, if they're lasting more than a year, the next 12 months of payments would be coming into the current liability section. Now, unto itself, this wouldn't necessarily seem like a big difference, because it's a little bit more than what was being disclosed before. Because before, the same information was in the financial statements, but only in the footnote section. So it was only as a disclosure to the footnotes, to financial statements, not as an actual number on the balance sheet. Well, this came along with 2014, and then they send out these documents called exposure drafts. This is where they send it out to us in the accounting world, and we get to review the standard and say what we like or dislike about it and put comments back. And then the FASB would go and revise and update Well, this was so tumultuous of a standard affecting people across the country that FASB didn't issue one exposure draft, not two exposure drafts, but three exposure drafts to write and rewrite the standard to come up with something that was acceptable. They finally approved it in 2018 to be effective in 2019 and 2020. But then again, it created such an uproar, they extended it another year. And then for the smaller companies, meaning companies that are not publicly traded, that companies that are not on the stock market, the non-publicly traded companies were allowed to then push FASB, the accounting standard from FASB one more year. And then we got into COVID. And COVID complicated a lot of things relative to our world as far as timing and requirements and what takes effect. And so it got kicked down the road again. So it wasn't until after 2022 that our clients, the escrow company clients and the title company clients, now had to follow this new standard of having to apply lease accounting to their balance sheet and to the financial statements. And so if you see any reference to an accounting standards update or an accounting standards codification number 842, that's lease accounting. That's what we're talking about. And that's what's created a little bit of havoc for some companies, a lot of it of havoc for other companies, and how the standard has to be applied relative to their financial statements and financial statement reporting, because the escrow companies and the title companies are audited by us because their regulators, the Department of Financial Protection and Innovation for the escrow companies and the Department of Insurance for the title companies, have to have their financial statements audited, have to follow certain standards. And one thing they have to follow is GAAP. They have to follow generally accepted accounting principles, which affects how their balance sheets look and how the auditing standards have to go into place and how the financial statements get presented to the regulator. We'll get into more of that, more items on this lease accounting, how it affects people when we get to the next part of lease accounting from Haas and Dawe.